Yes, good morning, everyone. Today we are going to talk about an interesting topic regarding Brazil. So, all over the world, you can able to see that interest rates are all-time low. So, liquidity is very high. Um, so, investors are pushing the market to all-time high because of excess liquidity in the market. So, but Brazil, as you know, yesterday I read a very interesting article regarding Brazil. So, investors pulled out really close to 12.5 reais from Brazilian stock market, especially in the hedge fund industry. So totally they have pulled out about $2.2 billion of investments in the hedge fund industry from Brazil, and more allocations are going towards fixed income securities. So we have to see what is the reason behind it is because interest rates are going high in Brazil because of higher inflationary environment, rise of commodity costs, and then energy costs is high. So as well as the currency is devaluing against the dollar. I mean, there is some excess inflation in the country like Brazil today. So the inflation is close to about 10% today. In Turkey, which is also one of the emerging markets, so we can see the inflation is double digit. So I think Brazil is one of the very classic environment for banks, especially because you have to see that banks, especially commercial banks, are very hard to lend money in the environment of high interest rates because people won't uh, apply for loans in the environment of high interest rates. What Brazilian banks always do in this environment is to buy the government bonds because the Central Bank of Brazil always offer bonds with inflation adjusted returns. So if you buy a treasury bond, you are protected against inflation. That's it. But Brazil also offers extra returns to investors in terms of inflation. And then if a currency is devaluing against other currencies, especially the dollar, you can get more and more of returns from the bonds, especially the government bonds. So historically, investment banks and commercial banks trade government bonds. So the spreads are very high, close to sometimes close to 14 to 15% in the higher inflationary era of 1990s, where Brazil uh, faced a lot of economic instabilities, lot of capital pulling from investors, etc. So the Brazilian bond interest rates usually is high because of inflation, as we have seen. At the same time, the government is willing to give a lot of interest to the bond buyers because Brazil has a history of high inflationary periods in the period of 1980s and 1990s. Especially, there is a crisis called Latin American crisis, as we know, if you may know earlier. And at the same time, Brazil has sharp currency fluctuations. They have the currency this year, usually the Brazilian real, usually depreciates against dollar. This year only it devalued 14% against the dollar. And at the same time, there is a very boom and bust period in Brazil. That's when the economic activity is picking up and interest rates are all-time low. In Brazil, the consumption is fine, and then the lending is good. So economy is doing well. So companies aggressively expand their offerings to the customers, and then banks usually make a lot of money by lending. So it's good. But when the economy is reversing, I mean, there is a high, if there is high inflation, if there is a sharp rise of commodity prices, the interest rates rose higher. So Brazil usually lack economic progress, which means, as you know, recession. But the banks mainly make a lot of money during this period by buying just government bonds. You can see this is something called inflation adjusted bonds. So government is willing to pay you spread that is more of inflation rate. And today the inflation is in Brazil is close to 10%. So at the same time, banks literally mint a lot of money in both good and bad times. So there was a New York Times article in 2015 stated that banks earn approximately 26% of equity. It is so big, The, in financial crisis of 2008 too, the Brazilian banks are very stable because they have a lot of liquidity in the balance sheet, and then they don't want to government to inject capital into the coffers. So it is very good, as you know. So it is bad for the consumer, especially when interest rates are all time high. In country like Brazil. So as we think, when double-digit inflation is picking up, so it's so bad for consumption. People will cut back their spending. They don't want to go outside. They don't want to spend their housing loan and mortgages. Usually, interest rates will go up, so they have to pay more. So I think this is one of the uh, bad thing for the consumer, for the common public. So this is the end of this video. So why we have taken this topic is that because today all over the world, as you have seen, the interest rates are very low. More and more are chasing yields. More and more money are going towards alternative assets because the treasury yields are very low in the US. Right now, the Fed has taken some measures to cut back their mortgage back buying and then MBS securities buying, right? So of 120 billion per month. So mainly, as you see, there is a flush of funds going towards alternative assets. So the record amount of money has been raised by a lot of players like Apollo Global Management, and then KKR, Blackstone, Brookfield, all are making a lot of bets into companies. They have different strategies because the institutional investors are chasing a lot of yields. So in Brazil, as you see, the reverse is happening because when interest rates are rising up, so more and more are going towards the fixed income securities rather than alternative assets. So it is one of the best thing we have noted yesterday. And for our surprise, as per the yesterday data by Bloomberg, Brazilian fixed income products has a total inflow of close to 17 billion reais. So it's so astonishing to see that the inverse things are happening in Brazil. So I think that is one of the interesting thing that we wanted to say you. So we will come up with another new video with some interesting news. Thank you.